Welcome, everyone, and thanks so much for joining us for today's webinar. My name is Mary Ann Hensley. I am the Vice President of Media Operations here at FreightWaves, and we are happy to present today's webinar in partnership with Redwood Logistics, one of the nation's fastest growing logistics providers, which is fueled by industry-leading technology and a passionate team of experts who deliver next-gen solutions for the industry. I'm honored to be here today with two respected industry veterans who are going to be sharing their thoughts on the volatility and uncertainty of the freight market, particularly as we prepare to enter the new year. I'm joined by Mark Yeager, who is the CEO of Redwood Logistics, and George Abernathy, President of FreightWaves. We'll be discussing where the industry has been and how we can set expectations for the new year. They'll also be joining us for a live Q&A at the end of their discussion. So before we get started, just a couple of quick housekeeping items. First, if you have any technical issues, you can reach out to our team via the chat function in your Zoom control panel. And if you have questions that you would like to ask our experts at the end of the discussion, you can enter those through the Q&A icon in your control panel, and we'll answer as many of those as we have time for. Now, without further ado, I'd like to go ahead and pass it over to George. Welcome, George. Glad to have you here today.
Thank you, Mary Ann. Good afternoon, everybody. Thank you to Mark in advance for what I'm sure is going to be a really interesting hour. Going to have to pat Mark on the back here from afar. This webinar had the highest number of pre-registrants for any FreightWaves webinar, which patting FreightWaves on the back a little bit is really saying something. So Mark, I guess that means we've got a pretty high bar to try to get over. But by saying that, 2019 going into 2020, there are a lot of people who are wondering what's going to happen in 2020, what direction the economy is going to turn, a variety of items. We've seen things like bankruptcies in transportation. We'll talk all about that. So, teeing it up with someone who has seen the market in multiple modes now, thinking about that, just a high level question to kick this off. How is Redwood preparing for 2020?
Well, thanks, George. It's an honor to be here, especially with such a large audience. Very exciting. Clearly, people are very curious about what's going to happen within the economy in 2020, and it's a question we've been asking ourselves quite a bit as well. So at Redwood, I mean, certainly we've seen a tumultuous period with 2018 and 2019, and everyone else in the audience experienced a very similar phenomenon. There's no doubt that 2018 was a uniquely disrupted environment. I don't think anybody felt that the ELDs were going to have the impact that they did, or that we were going to see as much in terms of demand as we experienced, particularly in the first half of 2018. So our belief at Redwood is it's unlikely that we're going to duplicate the dynamics around 2018. We also think it's unlikely we'll duplicate the dynamics around 2019. 2019 was an unusually soft year. We saw a very volatile spot market, which was quite challenging, I think, for everyone to try to deal with, right? So we don't think we've got the dynamics that are associated with 2019 either. When we're thinking about Redwood, and how we're positioning ourselves, I think our underlying assumptions are that we will see a relatively stable pricing environment going into the year. We probably won't see any significant uptick in demand until we think the second half. Now, that being said, last week turned out to be a highly volatile week, and it's very possible that we might be seeing an unanticipated shift in supply-demand dynamics, but it's way too early to call that. Our general outlook is relatively soft until the second half of the year. We think that as we enter into the second half of the year, trends that we've seen in Class 8 orders will end up correlating out to some positive momentum. within the marketplace, and we're likely to see supply contract and demand remain relatively stable. You know, that being said, there's a million things that can happen, you know, within the underlying economy. There's certainly a lot of uncertainties out there between global trade and you know, what's going on with bankruptcies right now. Even as we speak this week, we've seen some dramatic shifts, you know, in the underlying dynamics. So it's an exciting time. You know, at Redwood, we like where we're at. We've got a lot of positive momentum. We think we've worked well through a challenging market. We've been investing, and we're going to continue to invest in our people and our technology. We're bringing a lot of new customers on board. We're launching Connect 2.0, which is very exciting. And, you know, the company's evolving. We're doing more and more for our customers, you know, and for us, it's more about connecting our customers to the marketplace. So we feel like we're well positioned to deal with 2020, but there certainly is a lot of uncertainty as to just exactly what next year is going to throw at us.
That makes a lot of sense. So as you, let's deep dive a little bit about Redwood and maybe something that will have applicability to a number of folks with what's going on just this week. Obviously, the huge news around Celadon declaring bankruptcy, and the significant amount. I'm gonna zero in here, Mark, a little bit on, you know, one aspect of the business they did, the Mexico operations that they had. Have you know, you've just within the last year or so really expanded into the Mexico marketplace. It's timely given the announcement today of a new NAFTA agreement. How do you see the sort of combination of the new NAFTA and with uncertainty around tariffs? Do we have more certainty now? How is Redwood positioned to, and how are you investing in the Mexico market?
Yeah, I mean, I think that's a great question, and we would certainly say that there is more certainty right now. That is a very recent development. I think really even as recently as last week, there was a fair amount of concern that we weren't going to be able to get NAFTA 2 or USMCA approved or pushed through Congress, particularly since it appeared that there might be some reluctance to do anything that might be perceived as giving President Trump a win. We do think that this is a positive development and certainly indicates what we hope is a period of stability between the U.S. and Mexico. You know, obviously, they're a vital trading partner for us, one of our very largest. It's essential that we have a good, positive, you know, working relationship with them going forward. We have a long history of trade development with them, and we're all in favor of anything that keeps that moving in the right direction. You know, we recognized Mexico as a significant potential opportunity for us. Over a year and a half ago, we have worked very hard to put together what we think is really a top-notch team in the Mexican market. You know, we have personnel and, you know, an operating presence in several locations in Mexico. It's been growing very nicely, despite the fact that it has undoubtedly dealt with some real headwinds associated with uncertainty in the marketplace. But we think this does give everyone a much better understanding of the go forward strategy. It's not a perfect arrangement, but I think it's a very positive development that we're able to bring this through, and it looks like it's going to get to ratification, you know, potentially as early as pre-Christmas. So we're excited about it, and we think it bodes well for the future of our Mexico efforts.
You mentioned you know, giving a potential what could be viewed as a victory to President Trump in USMCA. Let's take this, and I don't want to get too political, but let's think about what the potential impact of next November could be. You talk about the second half of the year expecting some level of uptick. Where's your spidey sense, and where's your thoughts around next November? And do you plan for, or have any way to plan for, what the election results in November might hold? Or are we simply one tweet away from everything turned upside down?
Well, I think there's no doubt we're one tweet away from just about any potential outcome, right? You can't deny that. We live in a uniquely volatile time, in that regard. I think it's clear that certainly the administration is going to want to do whatever they can to avoid an economic downturn next year. It's been since the 1930s, I guess, the FDR administration, when the last president won a presidential election in an economic down cycle. So there's a very, very strong incentive for the administration to keep things moving in a positive direction. So I think that likely leads to a path of attempting to, iron out some of the trade uncertainty that's out there. I would say particularly with China, because that's going to be something that looms over the election and I think looms over the economy as long as it is an open item. Our kind of belief is we'll reach an accord with China, probably a phase one agreement of some kind. I doubt that we'll see a phase two, a meaningful agreement with the Chinese on trade, but we'll probably avoid a lot of the pain associated with some of the potential tariff moves, because I think there will just be too much reluctance to really subject the economy to too much of that. There certainly will be pressure to keep interest rates down. I think it'll be very difficult for anyone to get much real traction on some of our more important issues like the infrastructure. Folks just don't seem to have much of a stomach to tackle that as necessary as it is. So I'm afraid we're going to be, with many of our what should be higher priorities, I'm afraid we're going to be in a bit of a holding pattern. I also would be surprised if we slipped into a significant recession, because I do think there are just so many incentives, to avoid that. After the election, I think all bets are off. Obviously, I think we know that the path forward that the current administration is likely to follow, but there's a variety of outcomes that could be associated with a Democratic victory in November.
Let me do our listening audience a little bit of favor, maybe take a step back. I know Mark Yeager well. I know the Redwood company well. But perhaps we should do a little bit of broadening of this for folks who are participating with us. Over the last few years that you've been there, Redwood has not only grown. I think of it in both the breadth of the offering. You talked about Mexico a little bit, but also the depth of the offering. You want to just take a couple of minutes and just talk about, during your time frame, your tenure, how Redwood has evolved?
Yeah, sure, George. I think it's been a great story. It's Redwood has actually been around since 2001. So the company has been in the freight business for quite some time. They started as a pure brokerage model. Founder Todd Berger came out of American Backhaulers after a brief stint there and founded Redwood. And they really built over the course of time, I think, a great culture without a whole lot of capital. But they realized in early 2017 that they wanted to really get the organization to the next step. So they engaged in a small process. I was with a private equity firm at the time called CI Capital, and we had recently invested in a high quality LTL transmanagement company called Simplified. And we recognized the value of bringing together a truckload and transmanagement player like Redwood with a very high quality LTL offering like Simplified. And fortunately, the Redwood team saw things the same way. So we brought the companies together at the end of 2017. We've been super busy since then, growing the company organically with things like our Mexico initiative, but also through acquisition. So we have done 4 acquisitions since then. We've done 3 acquisitions this year alone. So it's been extremely busy, and the company has evolved over the course of time. So when you think about Redwood, most folks think about the truck brokerage. That's part of what we call Move. So we have Move, Manage, and Innovate, and Move is really truck brokerage, our trucking operation and distribution. The biggest part of that definitely is truck brokerage. We're a top 15 truck broker, about 20,000 carriers under contract, 5,000 customers, a mix of contract and spot, and a really seasoned team in that space. Manage is traditional transportation management for us. So you're talking about inbound and outbound procurement, carrier management, modal optimization, a variety of other supply chain services. There we like to think that we're bringing the tools of the Fortune 50 to the Fortune 5,000. That's a high growth area for us. And the third area is what we call innovate, and that's where Redwood Platform Services is. That's our fastest growing division. They're really focused on the implementation, integration, and optimization of transportation technologies. Within that space, we're an Oracle Gold Partner, Mercury Gates Integrator of the Year this year, and we're launching something we're very excited about, which is Redwood Connect, which is our no-code integration platform. As you know, it was named Best in Show at FreightWaves Live 2019, and we'll be launching version 2.0 of that product in the first quarter of 2020. So we've been super busy, and it's been a very exciting time at Redwood.
Damn, I'm tired just listening.
Yeah, me too.
A little busy over the last 2 years there, huh, Mark? Well, you give me a lot to jump off from. So let's actually talk about the Best in Show during the demo day at FreightWaves Live in Chicago, and your ranking within the freight tech 25 also continues to rise. How do you think? I mean, you're the person who's ultimately making the investments. How do you think about the investments you're making in machine learning, artificial intelligence, and how do you go about thinking about what that will do to increase your productivity, make you more valuable both to your external and internal customers?
Yeah, it's a good question, and it is tough. I'm definitely not a technical person. Anybody that works with me will tell you that. But nonetheless, I can see the value that technology has brought during the course of my career, and that's really just, we think, the tip of the iceberg, right? With Redwood Connect, we've been working on that now for at least 7 years. Some of the folks here would say 10 years, because we identified a pain point, and that was integration. How do we connect our customers to their carriers? How do we connect different independent operating systems, data streams, things like that? So we saw a very real need there, and we set about trying to solve for it. But I think one of the lessons there is that development isn't easy. It requires a lot of heavy lifting. It requires a lot of very real world insight. And so I think there's a lot of really exciting things going on with AI right now, and machine learning particularly. But I think we're still early stages, especially in the transportation industry. I think it's a pretty nascent effort. There's a lot of very good things going on, and we're looking at how can we jump in with our own resources. How can we use our ventures arm to invest in startups who have some great ideas on how to deploy AI into, the everyday work stream, which is really when it's going to make an impact on the industry. Right now, the impact has been relatively nominal, although there are folks in the industry who would probably disagree with that. I would say in a real world basis, it has not made the progress that we've seen in some other areas. But certainly within the freight space, there's no doubt that we can use AI to automate, repetitive tasks. We're working on ways to use AI to identify capacity, improve our core procurement functions within brokerage, which is absolutely vital. There's a lot of folks I think that we're seeing working on ways to eliminate inefficiencies, and you hear a lot of talk about things like empty mile reduction and what that can mean for our carrier partners. End of the day, what we're talking about is technology that can, lower cost for everyone in the supply chain, produce better service through better predictive analytics and more control. And, as we're looking at, what looks like a very uncertain market out there right now, I think everybody would like to have more control. What I would say is we're still a ways from, realizing the potential of AI in our space, but, that's a pretty exciting opportunity.
It really is. So let's talk about it. You really are running such a multifaceted company, but within the brokerage, that is sort of the history of Redwood. As it's my responsibility to ask about digital brokers on every one of these. But so let's talk a little bit about digital brokerage. I mean, you're obviously going down the road towards productivity. Have you seen any um, challenges around margin, or for you to try to be able to compete with that, or is your brokerage revenue from sources that aren't typically being competitive with some of the newer digital brokerages out there?
Yeah, I mean, I think every, all markets are competitive now. There's no question about it, right? And nobody is insulated from competition. What we're doing really is trying to expand our value proposition and offer more than just a truck, right? We really think we're connecting our customers to a much broader ecosystem, and that's a very, very powerful thing. So we don't want to be out, selling a commodity. We don't want to be way underpricing our services, but we do absolutely have to be competitive. One thing I will say though is it's an enormous market, and we have not seen, anyone come in at this point and have a hugely disruptive impact. We certainly haven't, found our business to be vulnerable to that type of price competition.
Not make.
I think over the course of time that could change, right? And that has to be a challenge and something we're mindful of.
Absolutely. But you talked about the investment arm that you've got. Let's go down that road a little bit, because 2018, with some of the valuations that were out there, 2019 is to some degree seen a little bit of change there, but still, and I'm interested in your opinion, but still seeing some pretty premium valuations out there. You guys have done 3 successful investments this year, acquisitions this year. Is there? I'd love for you to give the secret sauce away, but what are you doing that others are having some challenges in doing? Because 3 in a year is it's a good year.
3 in a year is a good year, and particularly if they're successfully integrated, right? Doing acquisitions is one thing, and succeeding is another, right? And I would say that I think we're doing both. We have had success bringing new companies into the family. I do think that as acquirers, we have a very good story to tell. We have a very unique but positive culture at Redwood. I think we offer some real, upside opportunity to entrepreneurs who maybe don't want to, become a part of a huge company, but want to become a part of something that's growing, something that's progressive, something that's tech forward. In that sense, I think it's very exciting. And we're in a growth mode, right? So we're also, as we're bringing folks in from the companies that we are acquiring, we're able to offer them, upside potential that it would be difficult for them to realize, becoming a part of a very large organization. So we kind of think we're in that sweet spot. We've got capital behind us, we've got sophistication, but we've still got a lot of upside, which is attractive, to the marketplace. I think we're starting to demonstrate too that we know how to integrate acquisitions. Our largest acquisition this year, Strive Logistics, was a very large truckload broker. We were able to bring them on successfully. We went onto their system because it was a better technology solution for us. And I think that gave the Strive team confidence that, we were in this for the right reasons, and that we were going to, go forward together. That it wasn't going to be maybe a more traditional or draconian acquisition scenario, right? So I think that approach has paid off, and right now we've got an organization that's coming together very nicely, and we certainly want to stay active in the acquisition market, in the years to come. So it's important that where we are successful, that the integrations are successful as well.
Yeah, I think that's a really interesting point about not force feeding your technology to the companies that are becoming part of the Redwood family. Certainly makes for a potentially positive outcome for others that you're thinking about. Well, and talking about that, how do you see the M&A world out there? I guess I would say the A world for you guys in 2020.
Yeah, I mean, I think it's interesting, certainly there is a lot of money out there. I don't think there's ever been, especially on the private equity side, more interest in the space and more capital available. We saw a very robust deal flow in 2018 and a pretty solid deal flow in the first half of 2019. It cooled off just a little bit. I would say in the second half of 2019, as a number of companies who were probably thinking about processes may have put things on hold as they tried to deal with, a somewhat abnormally soft economy. So I think deal flow probably slowed down a bit. My guess is that'll have its impacts on the first half of the year. We're anticipating that we'll see, fewer deals close probably first half of the year, certainly than we saw first half of 2019, but that the pace should pick back up in the second half simply because of the availability of capital out there and, kind of the dynamics of the transportation marketplace. It's, as we talked about, it's a huge industry. It's still massively fragmented. And I also think the fact that it's really sort of early stages from a digital transformation perspective, that's attractive to people who think that they can bring something to the table from a technology perspective. So we think it's still a very attractive space, very likely to see good, solid activity, particularly in the second half. And even the first half, we'll see some deals among companies that are somewhat counter-cyclical or are really strong enough performers to have weathered the storm well in 2019.
I got to tell you, over the last couple of weeks, I've been lucky enough to have the opportunity to speak to a number of industry leaders at FreightWaves Live. And I have to say that even having done a sit down with Jordan Belfort at the Wolf of Wall Street, I'm pretty sure that Mark Yeager is bringing a little bit more energy to this than even the Wolf of Wall Street.
Well, I got to bring something, George.
That's fair. Okay, it's fair. So let's move over to an area that I've got a little bit of experience in, that managed transportation side of your business. You think about, as being a broker, that's, oftentimes, trying to figure out how, to be the supply. Well, let's talk about the demand side a little bit. What are you seeing? What's your team seeing as I assume we're in something of a bid season right now? 2018 was quite the year for carriers, as we know. 2019, shippers may have, tried to pull a little bit back. What are you guys seeing as far as the bid responses at this point? And are your shipper customers, your underlying partners on the shipper side, giving you any direction, and how are you trying to counsel them on what their expectations should be around 2020 pricing?
Sure, absolutely. So we don't do as much bid activity as many companies our size would do. It's a fairly sizable amount of our business, but nothing like what some of the asset-based players deal with and those kinds of things. But it's sizable, and it's becoming more and more commonplace, right, for even mid-sized shippers to be out in the marketplace pretty regularly. What we've seen thus far is I would say, a relatively rational marketplace. I don't think shippers are trying to reach too much deeper. I do think that the reality is that there's only so much blood that you can squeeze out of the turnip, and carrier costs went up in 2018, and yes, they did get increases, but gave away some of those increases, and we're even seeing, a little bit of drop in contractual rates right now. Nothing like what we saw in the spot market,
right,
which was as volatile as I can ever remember seeing it. But, from a bid perspective, we're seeing things are fairly rational. We are having success in bids, with our good partners. I would, say that we think we'll see some modest upward momentum from a price perspective, but probably not at least until Q2 and potentially into Q3 or Q4. So what we're anticipating is rates will not go down further. They also aren't likely to see dramatic increases up, because we aren't seeing a particular uptick in demand. Now, as I said sort of at the outset, within your own data, what you guys put out there on the sonar side, we saw a very interesting phenomenon last week where carrier rejections went much higher than what we had seen really at any point in the year. And that was an interesting phenomenon, and certainly in part, fueled by both the holiday, but more importantly, probably the weather conditions that were existing, especially in the Northeast. But, nonetheless, it was an unusual move. So we may be seeing some more positive dynamics than what we had anticipated. But I think we're generally with the consensus that we're not going to see a real demand catalyst in the first half of the year.
What do you think are those potential, you talk a little bit about the weather, are there any, it's hard to predict a black swan, but are there black swans out there waiting for us in IMO 2020 or trade war? What are the things that you are, and I appreciate the commentary about what was seen in Sonar and some of the tender rejection data. What are you thinking about? What are you trying to plan ahead for, if it's even possible to plan ahead for that black swan event?
Yeah, I mean, I think I don't know that you can plan ahead for it, but at least you should be aware of it and be, cautiously following it and making sure you're making informed decisions around those potential landmines. Because I do think there's a few of them out there. Next week we're going to have a shift over in terms of ELD compliance requirements.
Yep.
My suspicion is it's not going to be nearly as impactful as what we saw in 2018, but there certainly could be some adjustments. I think there's a likelihood that we'll see an increase in bankruptcies in 2020 over even 2019 levels. And, 2019 levels have been much higher than 2018. Yep. The dynamics of 2018 probably kept a lot of carriers in business that were on their way out. And so I think that trend probably continues and maybe even accelerates. We're seeing it unfold this week, and that's a tragedy. And we are, seeing a once, great carrier being forced to close its doors, and that in and of itself, a single bankruptcy, has caused some disruption, last week. So it doesn't take a tremendous amount to throw supply and demand out of whack, at least temporarily. These are probably a temporary disruption phenomenon, but I think if you ask their customers that right now, it doesn't necessarily quite feel that way. But I think if you go beyond ELD, the one that doesn't seem to be getting talked about very much is AB5. And that's the change in driver classification that's going to take place January 1st in California.
Yep.
According to the California Trucking Association, that's 70,000 drivers that are being impacted in what is already a really volatile, environment. So from my perspective, I think it's shocking that it isn't getting more coverage. I think there's some real challenges to trying to make that conversion from being an owner-operator to a company driver. And I find it hard to imagine that there isn't going to be some disruption in capacity in that market. So I would keep very, very close on that issue. From a trade perspective, I think the big issue, looks like MCA is going to get through.
Right.
Glad to see that. The next one really is China, and as I already said, I think we're going to see kind of a détente, right? But I don't think we're going to see complete resolution to the market's concerns this year. So I think China trade will continue to be a bit of a headwind.
When you say AB5 around my house, that just sounds like the amount of liquid consumption that's occurred during a New England Patriots game. But so let me turn to the capacity side as you described, and if it should be said, you're right, it is a tragedy what happened with Celadon. It is such a largest of the truckload carrier bankruptcies, but has been all too often occurring. I'm gonna take us down a little bit of a different road. You're so well connected, and I want to have people thinking about this. You're so well connected through the technologies that Redwood brings to the market. Does it give you an advantage then, as you are connected to so many carriers, if you have to flex away during an event, a terribly tragic black swan event like what's happening down in Indianapolis?
Yeah, I mean, I think absolutely. To me, the technology and the scope of our network enables us to, not just find, new carriers in a Rolodex, right? But really determine who would be interested in this freight, right? Because not every carrier wants to step into Celadon's shoes, right? But there are carriers that would very much like to be participating in that business. And so, as we've evolved as a company and as we've grown and as we've combined with Strive and gotten to be, a pretty large scale broker, we've not only built a number of carriers, but we've built how we understand their network needs and how the freight that's within our control can be plugged into those networks, to create efficiencies for the carriers. Because the more our freight creates efficiencies for the carriers, the more likely they are to stick with us through good times and bad times, right? So we think there's a huge benefit both to scale, but it isn't just scale, but also to really being integrated, being connected with those carriers and understanding what freight they need to manage their businesses better.
Absolutely. So we're coming to that time of year. We've already been in it where the last mile is extraordinarily important to me, so that all of the non-Santa delivered Christmas presents are being delivered to me on time and in perfect shape. So with the your acquisition with such a large, when you brought Simplified together, you guys are a significant LTL player. Do you see the market shifting more towards LTL? How's the market played itself out in 19, and how do you expect the LTL market all the way up to the last mile to play itself out into 2020?
Yeah, I mean, obviously we're big fans of LTL. Simplified is LTL in its DNA, and we think we're a really nice bridge between the carrier community and our customers, and most of our customers find LTL to be extremely challenging to manage on their own, right? And I think the LTL community as a group of carriers really, when you look at how they came through 2019 and the disciplines that they showed, that's a well-run industry, right? There's no doubt about it. But we think that there's a reason that they are as disciplined as they are. Certainly, the growth prospects are very bright in my mind for the LTL community. Consumer expectations in general are changing, right? And they're really driving things. The consumer economy is what drives our current economy. And if you looked right now at how consumer has split from the industrial economy and is really kind of leading things forward, it really does show just how dependent we are on consumer confidence and consumer behavior. And, there's no doubt consumer expectations have fundamentally changed. They don't understand waiting 2 weeks for something, right? That's not going to happen. So what that means is there's a premium and an emphasis on speed, which inevitably leads to smaller and smaller shipments. So very good for parcel, obviously. Very good for last mile because more and more people expect things to be delivered at their home. Not as good, I would say, for intermodal, right? I think intermodal's got a real challenge and how they're going to position themselves to deal with this, concern. But by and large, the world of opportunity that it's opened up, especially in places like last mile, is really outstanding. I can't see any way that those shifts, go back the other way. I think this is a long-term, tremendous growth opportunity for a number of companies.
You mentioned intermodal a little bit. Just touch on that. It's fascinating to me to go through the sort of the modes and all the things that Redwood and your background touches on into 2020. Have you seen any signs with regards to how technology may be affecting intermodal to bring some additional productivities or the like, or any other trends that historically we haven't seen that could serve intermodal well in 2020?
Yeah, well, I think that's a good question. I think technology could really be a double-edged sword for intermodal. There's no doubt. There are tremendous inefficiencies, particularly on the side of the business that folks tend to ignore, which is drayage. The origin pickup and origin delivery. It's where most of the service issues occur. It's also where a tremendous amount of the inefficiencies reside, right? There's still way too many empty miles. Intermodal networks are not managed for balance in the way that many of the truckload carriers are. That is not necessarily true of the large asset players, but the industry itself is definitely challenged inherently from a balance perspective, and challenged to manage that street time, which is actually greater than than the time that a typical container spends on the rail. So there's certainly some opportunities there. I will say, though, that I think that intermodal is going to have to grapple with a much more efficient truck market. I think they lost share this year, at least in part because truck pricing got very, very aggressive, and intermodal chose not to necessarily follow suit. And that may very well be the right choice for them, particularly since, intermodal tends to be making multi-generational decisions as opposed to decisions to adapt to specific market conditions. But I do think intermodal is going to have to get a little more nimble. I do think they're going to have to view the pickup and delivery process differently, and they can use technology to make that happen. But I think if we want to see a growing intermodal infrastructure, which really the whole country, should want, because it is a valuable asset for us, they are going to have to think a little bit differently about their business model as they compete against an increasingly competitive truck market.
Absolutely. So let's talk a little bit about some of the investments that you're going to make, and maybe a prediction or two, and then we can. And again, then look and see if we've got some questions from folks, and make sure that they're, if you have questions for Mark, please feel free to send them in. So if you were going to pull the technology crystal ball out, you guys are bringing connectivity, you're bringing transparency, all of the buzzwords that 2 years ago, if we had done this, we would have been using, you guys are doing now. So I know we talked about AI, we talked about machine learning. If AI and machine learning are so 2019, what are we going to be talking about in 2020?
Well, I think we'll still be talking about AI and machine learning, right? Because as I said, I think we're still very much early days, right?
I'm still talking about blockchain, Mark. I mean,
Yeah, and I think, and I think blockchain too, a lot of these technologies, they may be feasible, but until you have widespread participation, they really aren't nearly as powerful, right? Until people are using it in their everyday lives, it's really not serving the potential that it was designed for, right? So I think people are still going to be, certainly talking about that. We like to think folks are going to think a lot about connectivity and how can they connect different data sets, how can they connect disparate systems, how can they connect to their vendors and their customers in different ways. So I think connectivity is going to be a central theme, and we think we're certainly well aligned along those lines. And maybe one of the things that we will get to this year, and I certainly hope so, is more about predictive analytics. We've got the data, we've got the machine learning. We're very good now at diagnostic analytics, understanding why something happened. But I think we're still in the dark in our markets about what's going to happen, and how can we, read the tea leaves, separate out all the noise from the real knowledge, and figure out, where things are going. So I would anticipate we're going to hear a lot about predictive analytics in 2020.
So I could not agree more. And even though I could go for hours on this, if Mark would let me to, I'm going to actually switch over and do some of the Q&A that we've got coming in chat, because there's some really good stuff in here. So with all the disruptions within the current economy, where do you see some of the LTL, because you guys have LTL in your blood over there at Redwood, where do you see the LTL union carriers compared to the non-unions? And do you see, we've seen what impact happened in the truckload space. Do you see anyone leaving the marketplace? And I loved how you described it, that they're so well run and operated at this point. My guess is that you'd be skeptical about anybody leaving the marketplace, but I don't want to speak for you.
Yeah, I know. I think you're right about that. I mean, we may have, some of the regional players could find themselves in some issues. I don't think so. I mean, I think they've done a very good job of maintaining pricing discipline within the industry. Depends on your perspective on that, I suppose. But as an outsider or semi-insider, I do think that they've done a nice job of being responsive to the market, but also not being, the dumbest guy in the room. So I think that they've done a good job there. It's a healthy industry right now for the most part. It is well run, in my mind. I do think that there is no doubt that the union carriers, do face a set of challenges, associated with that status, and, associated with some of the rigidity that those arrangements entail. So I think that to the extent there are folks that are vulnerable in the LTL space, it would be more the folks that have the long-term union issues to grapple with on a day-to-day basis.
Gotcha. So the question you mentioned about the AOBRDs and the ELD conversion that's literally right coming up upon us. And you talked a little bit about how that could be a short-term capacity crunch. Could that have a similar impact that you see with a bankruptcy like that happened at Celadon, where while the market may at a macro level be able to deal with that, but in certain markets there could be some level of greater impact that you may notice in tender rejections or those kind of metrics?
Yeah, I mean, I think that's absolutely right. I think that the disruption itself isn't likely to be sort of concentrated in a specific geography, right? But some geographies are just more vulnerable than others, right? So it's the more fragile geographies where a 3 or 4% decline in available capacity really makes a difference. That you'd see potential disruption. So I do think folks should really work as much as they can to kind of understand the dynamics of the markets that they're in. And then if you've got something that could compound, where you've got a challenging market like California, you put both the ELD issue on top of AB5, and you could have a multiplier effect.
Got it. So you talked a bit about the drayage and the challenges from a technology standpoint there. Let's shift that a little bit, but stay similar in some of the maritime, the freight and port operators being impacted by, it can be increased or decreasing trade. But let me take that one with time deficit demands, regulatory pressure, sustainability, environmental. Is that an area where technology and productivity and what you've watched over the years is just begging for improvement to happen?
Oh yeah, I think so, and it's getting to a critical point, right? Yep. I think that what you have right now is folks that are making decisions out of concern of gridlock and out of concern of bottleneck and out of concern of flows that get unmanageable, and I think you're seeing that manifest itself right now as significant amounts of shipments are being diverted to East Coast port, right? Yep. Because many folks are very concerned about disruption in the California market, and justifiably so. Technology can help. There's no doubt about it. There are many ways. The port infrastructure, and particularly drayage in and out of the ports, is still very much a spreadsheet industry. Really not necessarily embracing technology at the same pace. Certainly if you look at, physical unloading of ships and things like that, very different story, right? But when you think about that, contribute to maintaining port fluidity, it's still a very fragmented business that hasn't quite yet stepped up. I do think there's a lot of folks we're seeing through our ventures arm, a lot of folks that are stepping up and looking at how those operations can be improved through technology. So I do think there's tremendous opportunity there. And technology can really help us identify the choke points and work on those choke points in a constructive way, assuming we have buy-in from all the parties. But yes, I mean, I absolutely think so. And the reality is there's just not a choice, right? Either we're going to work really hard to improve the productivity of that part of our infrastructure, or we are going to fall behind the times from a competitive perspective with the rest of the world, who are much more productive than we are in many instances.
So now I am going to, well, not me, but an anonymous attendee is going to ask you for the secret sauce. So what should be the top 3 priorities for a brokerage to successfully acclimate to the freight environment that we're anticipating in 2020?
So I mean, I think that's a very good question. I mean, so from my perspective, it's a combination of embracing technology, right, and being willing to make the investment, understanding that it won't be short term, right. It's not going to be something that you get to pay off in 3 months or 6 months. It's more complex, and it does require patience and understanding. We also think that it's still a very human business, right? And we aren't at a point where we can do black box brokerage and expect to have the same level of service and commitment. We need really talented people, and we need to be, bringing them on board and doing the right things and incentivizing them in the right way. So it's still very much a people business. From my own perspective, I think we've greatly benefited from having access to capital and being able to invest and being able to expand, not just organically, but through acquisition as well. So from my perspective, it really helps to have solid capital backing if you want to accelerate your growth and get from 25 million to 50 million, or 50 to 100, or 100 to 250. Those are all stepping stones, and having access to capital certainly helps.
And I think that oftentimes the question is it harder to go from 25 to 100, 100 to 250? I think you'd agree they're different challenges, but the differentiators right now that weren't available 5 or 10 years ago are the technology offerings and the embracing of that, and that the growth that you'll not only get on the top line, but potentially within the productivity area is really what's going to make the difference from a broker that goes from 25 to 100 or 100 to 250. Don't you think?
I totally agree with that. And what I think is one of the real fundamental changes in our business is this, democratization of technology. Small brokers can now have very robust capabilities. Small shippers can now have tools that they never had access to, and the ability to tap into marketplace dynamics in a real-time way. That is changing things, and it isn't just changing things for the multi-billion-dollar, mega players, right? Certainly those folks are investing heavily and getting good results out of it. But in the modern world, there's a lot of technology out there, and even more emerging every day, that's really designed for that smaller broker or that smaller shipper.
Exactly. So we talked a fair amount about the south of the U.S. border. Redwood moves freight all over North America. There's a question, do you have an opinion on US-Canada border or the rates for freight in Canada? Is there anything that you're particularly thinking about for the provinces and what 2020 might hold?
Yeah, I mean, I can't say I've got any real insight into pricing dynamics in Canada. I think it's a great marketplace. Yep. We would love to really, we have a Canadian strategy that we'll be implementing this year, but we see a lot of opportunity in the Canadian markets. Similar to Mexico, we feel like if you're going to be in that market, you have to be in that market, right? You have to make a real commitment to the Canadian market, and the upside there is tremendous. And it would be a disservice for us to not be further developing our capabilities in the Canadian marketplace. So you'll see that as a strategic area of focus this year.
So somebody was actually listening when we were talking about technology in the brokerage area. And now I'm really going to put you on the spot.
Uh-oh.
What would the one technology investment in 2020 would you suggest it be for a brokerage? And I'm going to say it can't either be Redwood Connect nor FreightWaves Sonar. And if I didn't say Redwood Connect and FreightWaves Sonar, but where would you if you were running that sort of brokerage unit, just a brokerage, where would you spend your technology dollars?
Sure. Well, so for me, I would really focus. I would think about function and where the real pain point is. And a lot of folks get very excited about process automation, and that's fine. That's great if we can take something from 8 minutes down to 4 minutes. That's nice. Or take $5 a load out, right? But if I was particularly as a smaller carrier, or as a smaller broker, I would really focus on my procurement process. I would say, look, how can I buy better? So how can I understand the market better? How can I reach the right carriers better, right? How can I access tools that enable me to give a much broader view and a much more informed view of the market in real time? And I think there's tools out there that can really help, that can help small brokers have the kind of visibility that traditionally only larger brokers have. So that's where I put my dollar.
I think we touched on it briefly. There's a question about fuel surcharges, but we only touched on it briefly. Anything in the Redwood thought process around IMO 2020 and what kind of impact it specifically could have?
Yeah, I mean, I think it will create some instability, right? Potentially, right? Because obviously there's going to be some pressure on production. I think we're in a pretty good position to be able to handle that shift, and it won't be a long-term impact on us or on our carriers. So I don't see it as being something that has, material impacts long-term, but it could be temporarily disruptive. And it's always important to us that we look at the entire transaction and all the costs, fully loaded on a dynamic basis. So we'll make sure we're kind of keeping an eye on that and making sure we're managing accordingly.
Well, we've come up to the top of the hour, and as I described, I could do this all day. Mark's got a real job to go back to running one of the most impressive logistics companies in North America. So, Mark, thank you very much for doing this. Thank you to the record number of registrants. I hope that we provided the kind of value. I'm smarter than I was an hour ago. Mark, thank you very much. Wonderful, happy holidays, and all the best to the folks at Redwood.
Same to you, George, and likewise to Marianne.
Thank you both for being here, and thank all of you for attending. We hope you'll join us again for another webinar soon. Have a great afternoon.